Lots of things to talk about today. Rotation within the US session, some of the metals stories that are dominating. I'll mention the metals and the commodities space for now, because this could be something that has an impact on the London market, of course. We travelled up a long way, it seems, on geopolitical tension, and now we retreat a little bit. So oil prices weaker, silver weaker. I guess this just illustrates how some of that story was about geopolitical tension and nervousness there.
I think that's absolutely right, Anna, and you're right that commodities are the exciting movement that we've seen so far today in markets in the Asia session. Oil particularly, and also silver, has just been completely crazy. Oil is the one that's obviously the more pure geopolitical play. You know, the structural story here is that we've got an overhang of excess supply, but that's a longer term story. In the short term, there's the problem about physical delivery, some short-term supply constraints compounded by geopolitical concerns. Now, some of those geopolitical concerns were eased up overnight. As you know, Donald Trump said they weren't likely to invade Iran immediately. That kind of removed some of that immediate kind of pressure that put in there. So oil prices have fallen heavily. And silver has been absolutely crazy. To silver, it's a slightly different story. This is a diversifying trade. It's people trying to get away from the US dollar to seek out other assets. We've talked about it a lot recently. Fundamentally, that's a good trade. The problem is silver's double in price from where it was only a few months ago. So it's gone just way too far ahead of itself. It's been an extraordinary bubble, and as you know, we talk about a lot in the show that if you find a bubble, run towards it and hop on board. You don't fight it initially. I think this is now the stage of the silver bubble where if you have been fortunate to be on board it, you maybe want to get out, but I think it's definitely too early to fight it. I'm not convinced that precious metals have topped out yet. They've just entered the kind of more volatile end game, but it might be the beginning of the end game.
OK, so we'll keep an eye on that one. Hard to read what is going on. Mark, what do you make of the rotation in US stocks at the moment? Out of big tech towards small caps, this kind of run-it-hot economy story that some people are talking about in the States. Is that something that has got legs? Because muscle memory tells me that small caps run for a little while and then fall over.
You're correct, Guy, and you're kind of picking on me because I'm the guy who falls for every value trap going. So I'm the guy who always loves the small cap trade and always thinks they should come back and outperform. And of course, in recent years, I've been generally wrong on that until kind of last year. Maybe it kind of has been more exciting. It's certainly the end of last year. Small caps have started doing well again. So whenever small caps start doing well, I'm one of the Muppets who always get enthusiastic that this time it's sustainable. But is it really? Perhaps this time it'll be like you say, it'll fade at some point, and that's because the AI capex bubble is not finished inflating yet. That's still the big driver of markets this year. And while we're going to probably have some short-term volatility, that's not going to be the dynamic for the next couple of weeks. I think we've still got some more months to play out of that AI inflation trade, and that means growth will get another big kind of run again. From a longer-term point of view, I absolutely believe that small caps will continue to outperform, but I'm not sure if I hold that view on a 6-month horizon.